Good morning, everyone. Hope you're doing well. Andy Tuttle here with the Tuttle Group at Fairway Mortgage, here with the DFW Mortgage Market Update. We do it every week just to help you be informed about what's going on in the market, how that impacts rates, and how that affects you when you're looking to buy a home. And so here we are, another week, and a lot of news. We had housing news this week. We had Trump talk about the NAFTA trade agreements, and we had the big Jackson Hole Economic Symposium. And so we'll talk about all that and how that affects interest rates. So the first thing, earlier in this week, we had some of the housing numbers come out, and even though sometimes the media, I feel, misses this stuff, the news really wasn't as bad as they made it sound out to be. They got a little crazy about the inventory numbers rising by 4,000, and so the inventory went up a little bit, ticked up, but frankly that's just a little bit of normalization. So we're at a 5.8 month supply right now nationally. Obviously in pockets it's a lot less than that, same as DFW. In some spots there's a 1.2 month supply, but overall 5.8, that's again just healthy. It's normalization. We're seeing that. And we're getting out of the summer months. Again, great time to buy. And the other news that came out, the housing news, the home price index, which measures the prices of single-family homes, rose by just 0.1%, but 6.5% year-over-year appreciation nationwide, a little bit, almost 8% in DFW. Either way, you take the low end of that number, $200,000 purchase. Let's say you just put 5% down. That's $10,000, and you get 6.5% appreciation on the $200,000. That's $13,000 in appreciation. You're getting 130% return. It's not bad. Can't get that. You get not bad gig, right? So, and you get to live in the house. Yeah, you pay monthly payments, but you're doing that either way. Part of that's going to principal. That's why it's such a great time to buy, not to mention all the tax benefits and everything else. But again, hope that's helpful information. Now let's go to the last thing that happened this week, which was Jackson Hole Symposium. Both the Fed Chair, Janet Yellen, and the European Central Bank President, Mario Draghi, didn't really talk a lot about monetary policy, didn't really discuss any details about the unwinding of the quantitative easing. And because of that, we actually had a pretty decent week, and it ended well. So let's go to the charts. So this is, remember, a price chart for the mortgage-backed securities. So the higher the price, the lower the rates, and vice versa. Again, we've been talking about it every week. We were in a nice upward escalator here in the price chart, and a nice ride. Now we're in the middle of this trading range here, but we ended the week decent, right in the middle of the range. A little bit of the rally. Again, the stock markets had some trouble with Trump's comments on the NAFTA trade agreement renegotiations, because it means we'll probably pull out at some point. They didn't like that. That benefited bonds, and then the monetary policy talk, or lack thereof, also benefited bonds. So we'll see what happens early next week. We've got jobs reports coming out next week. The jobs week's next week. So a lot of things can move the market, but you are in a good spot if you got pre-approved anywhere within the last few months. You are at the same rates or better than when you got pre-approved. So that means keep getting aggressive with those offers. Get out there, get those homes, and know that me and my team, we're here for you to help you call the listing agent and get a hold of the seller if possible on these offers. Work with your excellent agents and help you guys negotiate the contract, get everything in there so you can make less offers, get the home that you really want, and then make sure you got good financing and can close quickly in this market. So call us if you need us. We're here for you. We appreciate you. Have a great weekend.